What's up everybody, welcome to the Stocks channel. My name is Corey and today we saw a continuation of the bounce off of that very strong support trend line. Will we continue to see new highs in this macro bull market? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart, see what's going on in the stock market today. Alright, so today on SPY we were up 0.91% and we did see another strong continuation of that bounce off of that very strong support trend line. So remember, this macro level bull market is alive as long as SPY is above 455, and today we did see bullish price action closing near the high of the day and squeaking out a close ever so slightly back above the 20 simple moving average. So if we can see SPY starting to break out above 470 and 472, it's going to look extremely likely that we will see brand new all-time highs in the very near future. We'll regain the full bull trend, we'll more than likely retest the previous all-time high at 478, eventually break through that level and get to the price targets above around 483. So right now the bulls do look like they're taking back over control ever since that strong bounce off of that macro level support trend line, and we can clearly see bullish price action closing near the high of the day for 2 days in a row. Now in the event we start to pull back, you're going to want to look for support right around 467.8 and the 50 EMA at 465, and below that we will be looking like we're breaking down yet again, with strong support levels at 462 and that support trend line right around 458 to 457. Remember, if at any point we lose the support trend line, you're looking for the gap close at 455, and below that it's looking extremely likely we're going to see the full-blown stock market correction in the magnitude of 10 to 15%. But right now you have to remember that it's a bull market until it's not, and this support trend line has contained all dips going back to 2020. So you need to respect that strong support level, and as long as we're above that support level, this is still going to be a bull market. Remember, I'm talking about a macro level trend that's over 2 years old now, and that's not a trend that you just want to assume is going to break down. You want to wait for price action to confirm it. Jumping over to the NASDAQ 100 triple Qs, you can see a very similar sign as SPY with a strong bounce with the triple Qs going up 1.5% today and closing back above the 5 EMA. Remember, the strong support level on the triple Qs is at 374, and we did test that level yesterday, and now we're closing near the high of the day for 2 days in a row. Now the triple Qs are looking a lot weaker than SPY because this was a sector rotation out of the tech sector, so it does look like the tech sector, which is the triple Qs, need to get back above this 50 EMA, which is right around 389 to 390. We'll have a bullish breakout back above about 392, and above 392 we should retest the previous resistance right around 400 to 401. If at any point we break out, we should see a very quick trip to new all-time highs with a price target at 410 and 415. Respect that resistance trend line right around 401 though, because it will be a strong resistance. So don't just assume we have to break out and immediately go to a new all-time high as soon as we break out above 392. Now to the downside, you're looking for strong support at 383, 379, and then that very strong support level at 374. And remember, below 374, it should be a quick trip, which is a full-blown stock market correction to close the gap on the triple Qs at 360. Jumping over to the Dow Jones, you can see the Dow Jones was up about 0.5% today, and we still do have the bull trend in the Dow Jones, and we are still holding the breakout level as support, which is right around 360 on the Dow Jones ETF. So you can clearly see the Dow Jones is still looking very strong with that strong bull trend, with the daily price action holding above critical support right around 360 to 361. So we should be seeing a retest of the previous all-time highs in the very near future, and we will have resistance on the way there at 365. Look for a retest of the previous all-time high at 368, and on a breakout above that level, you're looking for a brand new all-time high at 372. If at any point we break down below 360, look for strong support at the 50 EMA, which is now at 358. If we break below the 50 EMA, we could find support at 355, or we could see another correction in the Dow Jones that comes down to close the gap right around 349. In the Russell 2000, we were up just over 1% today, and we closed just below the 5 EMA, and we still do have a bear trend in the Russell 2000. So don't get bullish on the Russell until it can go all the way back above about 231 to 234, but we still do have the possibility we're going to bounce off at 214 and come up here to close the gap just above 228. On the way to close that gap, we'll have resistance at 218, 220, and 222.5. If we can start breaking out above about 222.5 to 223, we could see a quick chip to close that gap with minor resistance right around 226. Now, if we do lose the support trend line at 214, you're looking for a retest of 212, and below that, you're looking for 207 and 205. On the Arkk ETF, we were up 2.76% today, and we closed right on top of the 5 EMA, and we still do have the full bear trend. Remember, there's still the possibility we saw the bottom around $81, But we have a bear trend, so we need to respect that, and we can't get bullish until we start to break out of this resistance trend line, which means we'll need to see Arkk breaking out above 93 and then starting to close back above 99. Once Arkk starts closing back above 99, it will be looking a lot more bullish, and we might be able to say that the bear market is ending and we could be going into a bull cycle. Wait for price action to confirm it, and there's a long ways to go before we're back above 99, so you need to be patient. If you're taking long trades from here, it's still a great risk-reward ratio. You just need to understand that if we start breaking through support at $81, you will want to take the loss because we could be going back down to 70. On the VIX, we were down just over 5% today, so we still see the VIX getting crushed, and we still see the VIX failing to close above 20. Remember, we need to see the VIX above 20 to see a deeper pullback, which could lead to a correction, and we're just not seeing that price action. If the VIX starts breaking back down below 18, you're looking for support at 16 and 15. And if we start breaking below 16 and 15, we're looking for a macro bull trend that's going to take the VIX all the way back down to 12, which will be very bullish price action. If at any point the VIX breaks above 20, get a lot more cautious, and the VIX back above 24, we're more than likely going to see that full-blown correction. On Bitcoin, we're almost up 2% currently, and we are back above the 5 EMA, and so far we are holding up above that support level at 40,600. If we lose that support, we have one more line of defense below, right around 38,000, but below 38,000, we could be going all the way back down to 30,000. You can clearly see Bitcoin's in a bear trend, so there's no reason to be getting overly bullish, and we really need to see Bitcoin breaking out back above about 51 to 53,000 to start saying it could go back into another bull cycle. So don't be bullish on Bitcoin, be patient and wait to see if these support levels are going to hold up, and wait for that price action confirmation. If you're taking long trades here, I would say that your risk level should be back down here below about 38,000, because we could be going all the way back down to 30,000 if we do break down below that support level. We have a full bear trend, so you need to respect the fact that the trend is still pushing price action lower. On NVDA stock, we were up just over 1.5% today, and you can see we're still holding up above that critical support level at 271. Remember, NVIDIA has a very critical support level there, because below that, we could be coming back down to 253, and below that, we have a quick trip to close the gap at 233. So those are your three very critical support levels to pay attention to, and to get more bullish, we need to see price action breaking out back above 285 and starting to close back above about 292. Above that, we still have to break the resistance trend line right around 297 to 298, and above that, we could see another bull cycle that could retest the previous all-time high and possibly even form a brand new all-time high. But be patient and wait for that price action confirmation to break out back above the 290s. Otherwise, you want to set your risk and reward ratio right down here around 271 and possibly even the support trend line right around 260. On Tesla stock, we were up about 0.59% today, and we still do have the bull trend, and we still do have the price action holding up above the positively sloping 20 simple moving average. So it looks very likely like we're going to retest the resistance trend line right around 1080. So on a bullish breakout above 1080, you're looking for a retest of 1208 and then 1240. Above 1240, we're looking for new all-time highs with a price target of 1400. And on a breakdown below $1,000, we're looking for a quick trip to close the gap below right around 940. So we still have the bull trend and we still have bullish price action. So we will want to look for that breakout above 1080. And if we get rejected from 1080, we're looking for a retest of the 50 EMA or the 20 simple moving average right around 1030 to 1040. On Apple stock, we were up 1.68% today, and we did see Apple stock getting a really nice bounce. We did lose the bull trend, but that doesn't mean we can't just see some sideways consolidation, build up some energy for another breakout, and possibly still get to that price target at 188. Remember, we don't want to put too much focus on 188 until we regain the bull trend, and in order to do that, we will need to see price action start closing back above 176 and eventually breaking back out above 180. The most critical support level at these levels is going to be right around 167, because if we break below 167, we will see a full-blown correction that could take Apple stock all the way back down to about 157 with a minor support at 162 on the way there. On the financial sector, we still see strength going up 0.88%, and we still see the full bull trend, and we still see very bullish price action continuing to close at new all-time highs. On the industrial sector, we were up 0.6% today, and again, we still have bullish price action, and we still do have the full bull trend. The healthcare sector was up 0.8% today, and it does look like we're starting to bounce and possibly going up here to close the gap above. The energy sector was up 3.4% today, and we can clearly see very strong bullish price action in the full bull trend, so the energy sector is still looking very bullish. So jumping back over to the S&P 500, you can clearly see we're getting a very strong bounce off of that very critical support trend line, which could send the S&P 500 back to new all-time highs. We're going to know very soon if we get the bullish breakout. We should see new all-time highs in just a matter of weeks. So continue to watch the price action and remember that you are in a macro level bull market. There's no reason to get bearish and expect that full-blown correction unless we see price action slicing through our critical support levels below. So stay objective and be patient because a lot of this market is very simple to understand. You just have to be patient and wait for price action confirmation to know exactly how to place your trades. If you were patient for that support trendline test and you bought at support knowing it was a great risk reward ratio, you're in a very profitable trade and you're already crushing this market for the year. Another great way to ensure you crush this market in the year 2022 is to join Bank Trade Alerts, which was up 4.4% just today alone. Bank Trade Alerts is an algorithm-driven trade alert service that sends all of your buy and sell alerts directly via email and text message and only trades the ETF TQQQ. With all of this market volatility and a brand new trading year, now is the best time to become a bank member. You can find out all of the information and how to join Bank Trade Alerts by clicking on the link in the description below. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis to help you navigate this market, and I'm bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.